debt is not a math problem. Like, it makes sense, right? It's a behavior problem because we don't understand financial literacy. We don't understand how money works. We go get $20,000 and then we want to go hit the club.
Basically what we're doing is we're paying ourselves from our business to our personal, but we're using business credit. On business credit, we're gonna make money off liquidating our credit cards, but we also are gonna be paying ourselves. So that's also gonna create paycheck stubs. So now we can use the leverage, the paycheck stubs, to now provide proof of income for things, for funding, or to get property.
So there's really no reason why you guys can't start. It's just all about being creative, resourceful, and think about, like, all right, not taking no for answer. Like, how can I get in?
Right.
Mr. Baker, how can we make something happen? I understand I can't do nothing today, but how can I make something so my next 60 days is...
Hey, wait. I know you want to watch this next video, but listen, if you are an entrepreneur, business coach, business consultant, or a small business owner who has a story and wants to learn how to create multiple streams of income from your story, I need you to text me right now, my book, to 646-687-4152. That is my personal number. I have been an author for over 12 years. I've written 10 books. 4 of them have been bestsellers, and I've sold over 100,000 books. But I've also helped a lot of my clients take their expertise and put it into a story, then create multiple streams of income from that. So I want to help you do the same thing. So text my book to 646-687-4152. All right, let's go back to the video. All right, so welcome to another awesome episode of Inside the Vault with Ash Cash, the greatest money mindset show on the planet. Listen, y'all, we are helping people get funded, live their dreams using other people's money. Yo, if you missed the last episode with my guys, we were able to get over $2 million in funding. This is $2 million that's back in our community, $2 million that people were able to use to run real estate plays and create generational wealth for their families. My guys are back. We're going to talk about, because here's the biggest thing I got, right? Everybody was excited. They loved the information. They joined your challenge. They were making, they were getting good plays. But I was hearing people like, yo, what about the people who have bad credit? Can you get funded with bad credit? Can you bring them back? Can we talk about, like, how do we get to that next level? We want to create generational wealth for ourselves, but it ain't our fault that our parents put the furniture in our name. It ain't our fault, right, that we didn't learn about credit till we had to mess it up. And so my guys are back to talk about how to get funded with bad credit. Everybody should know y'all by now, but if they don't, you know what I'm saying? Like, please introduce yourself.
So I'm Smitty the GOAT.
Ramel, the young mogul.
Boom, real estate investor, real estate coach.
And we are, no, like an R&B group. And we are get funded with credit. Nah, but so like, you know, one of the things, like when I first met Boom, actually, one of the things I was always excited about, because I think first and foremost, y'all shatter a lot of the misconceptions about wealth, right? To be sitting in front of 3 multimillionaires who are still relatively young is inspiring, because y'all don't play basketball, y'all don't rap. I know Smitty look like he rap, but he don't rap no more, right? Y'all don't rap, but y'all are really teaching our community these plays that are tangible, though, like not just like regurgitated information that y'all heard. Like, y'all actually running these plays and y'all actually making money for yourselves, but then y'all have a whole community of people who are also making money, building generational wealth. I want to start with, straight off the bat, I want some plays, right? How can somebody get funded to live out their dreams, to get, real estate, to get a store, like to build generational wealth? How can they do that if they have bad credit?
So one of the ways, and one, I appreciate you for having us on here, and one of the ways that a lot of individuals can get started, and I just shared this on another podcast we did, but I actually did this with one of my mentees. You can buy real estate with 100% financing. Not even off the credit cards, not even off of this or private money. Literally, we utilize something called hard money loans. So you got private money, which, yo, Ash, let me hold $300,000. Then we got traditional funding where you go to Bank of America, you go to credit unions, hey, can I put a loan in for $300,000? But you got something in the middle called hard money where they don't ask as many questions as the traditional finance, like the bigger banks, but it's not as easy as, yo, Ash, just wire me over $300,000. But the thing about hard money is asset-based lending. So they only care about the asset. Is the property you buying a good enough deal where we're the lender and you are going to make money. So when you tap into that, there's a lot of other things that's needed on a traditional side that you don't have to worry about. You don't have to worry about all these tax returns, credit, all these different types of things. But what makes it even better is lenders utilize a percentage, right, to make it as simple as possible. Whatever the property is going to be worth when it's fully fixed up, they'll lend you up to 70%. So if you bought a property that's $100,000 fully fixed up, they'll lend you up to $70,000. Your purchase and the construction got to be under $70,000. That's 70%. But with some lenders, and I'll give y'all a lender, what some lenders do is if it's under 65%, that means you got all of this room. That means you can still mess up, but it's like you really got to try hard to mess up. So with that being said, they'll fund the entire thing. There's no down payment. So that's how I do a lot of my deals, and that's how a lot of my mentees, they do a lot of their deals. So now if you buy a property and you can purchase it for $45,000 and put $20,000 into it, let's just say for this sake of conversation, you all in under $65,000, they'll say, look, there's usually it's a 10% down payment, a 15% down payment, 20% down payment. Now there's none. We'll cover everything. We'll cover the purchase and construction. So usually you might need $10,000 to buy a house. We'll go to Smitty, get a credit card. But for individuals that are like, I don't have 700 credit score, 680 credit score, 650 to go get that $10,000 credit card, dang, even though they're funding the majority of the deal, I don't have that down payment piece. Well, now all you have to do, which requires no credit, just you finding good deals, and which is even better, we were talking about earlier, is now is the perfect time to get started because a lot of these properties are on discount right now. You know, you was in banking when the economy is a little messed up, interest rates get a little higher. When interest rates are higher, buyers don't buy as much. When buyers don't buy as much, properties sit longer. When properties sit longer, people are like, look, listen, I'll take a little L. I'll take $20,000 off, $30,000 off. So a lot of these properties already fall within that 65% by default because they're sitting on the market for 3 months, 4 months, 5 months, 6 months. And you can even just go to Zillow.com and type in your zip code and you'll see it says at the top 63 days, 72 days, 19 days, and you'll see right there at the top, price drop 13,000, price drop 20,000, price drop 5,000. So it's so, I don't want to say it's easy because everything has somewhere. I don't want to lie to anybody, but it's not rocket science. You literally go to Zillow, you see the property sitting on the market, you see the price drop, and now you do your math, you're like, yo, this works out as is. Like, I don't even have to do anything extra, but of course, we're going to put a low ball them even still. But now you can fit that 65% in just by going directly on Zillow and just looking at the numbers that's already dropping. And now when you go to the lender, like the one I use there, it's called Crowdcopia, C-R-O-W, Copia, C-R-O-D-W-D-C-O-P-I-A. And now they'll fund everything. Wow. They're in Philadelphia. So you want to find other lenders. And they do, I think they do Philly and they do Jersey. And they might do Baltimore. I'm not 100% sure. But you just find other lenders and ask, do you guys offer 100% down payment programs, loans based off of the deal? And a lot of them do. There's a lot of them that do. So now you can get in no money and you can get in without needing credit. And then if you flip the property, they don't even require credit because you don't have to go ahead and refinance the house out. So you're buying it, you're fixing it up, and then sell it. No credit is needed on none of that, and they funding the whole thing.
Wow. That's powerful. And I love that you started with the hard money lender first, because I know some people may have not ever heard of a hard money lender, and for those who might have heard of a hard money lender, they probably have a negative thought process as it relates to a hard money lender, right? Because they probably heard, well, hard money lender charges all these different rates and the rates are high or whatever. But the truth of the matter is, right, the higher the risk, right, the more you have to pay interest. But 100%, like, so let's say if you got bad credit and you can't get access to make money, well, who cares about interest rate at that point, right? But if you go to a hard money lender, which is an asset-based lender, which I love, right? Because if it's an asset-based lender, they're giving you the money, and the risk that they're taking is that you don't pay it back. But at the end of the day, they got a deal that has equity in it, so they're willing to take that risk and give it to you. The money that you pay them back, you know what I'm saying? Like the loan that they give you, pay them back. You making 100%, whatever the interest rate is, you making 100% because you didn't have a down payment. So I love that you mentioned hard money
I got
first.
an even better one. You talk about interest rates, so you do hard money. A lot of times it might be 9%, 10%, 11% interest. But if you have no down payment, so you have no money in the game, right? And when a property sells, you make 50, 60, 70. Even if you only make $30,000 on that deal, you didn't put no money up, and you was in that, let's say you was in that project for 6 months, and you paid 10% interest for 6 months. But when everything was said and done, you made $60,000 off nothing.
Nothing.
Off nothing. Literally nothing. And when you buying a property, you got things like transfer tax and stuff. But when the deal is cheap enough, you can work some of that numbers inside of the deal. So you worry about 4 or 5 months of interest, 6 months of interest, but you just made $30,000 on the low end. Some of these deals, I know people slide my mentees, they might make $60,000, $70,000, $80,000 on the deal. So what are we really talking about?
Right, 100%.
What are we, like, it makes,
100%.
it's
Crazy.
100%. And then the great thing about it though too is that now that you have the 60,000, you could now, with bad credit, you can now start let's start fixing your credit. So that way you could, when you run the play again, you could keep running the hard money play, or you could start fixing your credit.
Or I'll give you 2 plays, right? So they made 60,000, right?
Yep.
By running this exact play that Boone just broke down, right? But also you could go get secured business lines of credit. So the difference between secured and unsecured, secured is I'm putting my own money up to start, right? Because I got to build that relationship. Because right now I'm a risk. With the unsecured, you just go get approved for a business line of credit. So I'm gonna take the 60 from Boone, or that I made by running the strategy that Boone told me, and I could go to Key Bank, put down 60,000 secured business line of credit, pay that off in 3 to 6 months. Now you built a relationship with them. Key Bank is gonna now return that, but it's gonna become unsecured. So you get back your 60 plus an additional $60,000. So now you just turn that money into more lines of credit, and then I could go to different banks, go to Bank of America, do the exact same thing. Turn that 60 to another 60,000. You just created $160,000 in business lines of credit by not even utilizing your own credit, but understand that you got cash, right?
Wow. Yeah.
And I'm gonna give one more because I really want to make sure everybody that's watching this, if you have bad credit, it's just about having a strategy. It's all about being creative, right? So it's about cash flow. So you have fintech companies where they'll approve you based upon your transaction history. So if I made 60,000, or this is what I did. I bought an apartment building, but my job paid for it. Everybody, yo, damn, Mogul, how job pay for your apartment building? Well, when I get my direct deposits, right? I set up to where my direct deposits would go into my business account. So every 2 weeks, the money would be going into my business account showing transaction history. No, I'm not filing taxes on it. Just instead of me going to my personal, it's going to my business. But now I go to a fintech company like Bluevine showing transaction history of 6 months of money coming in out of my account. They approved me for $40,000 line of credit. That was my down payment on a 6-unit apartment building.
Wow.
So
wow.
the double down on that, like you said, using the transaction history, when you buying a property that needs work on it, and you got a lender, like with the hard money, they give you your money in draws. They don't drop the whole $50,000 for the whole construction on you. They give it to you in phases and draws. So, hey, look, we're done phase 1, they'll send 10,000. We're done phase 2, they might send 20, depending on what number you need and what you put on. So think about this, conversation he just said, 6 months. What if you got $5,000 to $10,000 coming in every single month from different draws? Remember, we got in with no credit, so now you're showing transaction history of lending money, but it's coming in a wire.
Right. Wow.
It's coming in direct wire. So this is literally, like, I want people to understand.
Wait, let's get
Everything we're talking about is not theory.
Right.
It's not something we Google. It's like stuff that we actually did and actually successfully finished. We actually successfully finished these projects with the same lender I'm talking about. I just paid them off a loan last week. Wow. Literally a whole $171,000 loan last week. They covered everything. I think I came out of pocket like $6,000. That was from me, well, my fees and different stuff like that. So now you got the money coming in every single month from the draws. You go to the fintech companies, you go to Divvy, all these different places where you're showing, hey, we're making money every single month. No credit check, and you just showing them the statements.
Yep, the company I used was Funbox. Funbox gives you, it says 6 months of bank statements that you make $10,000 a month every month, and they'll lend you out money. Updeck gave me $85,000 based off how much money my business was generating. So they wasn't even looking at the credit side. It was like, all right, how much is your business making? I showed them the records how my business made. Oh, they dropped $85,000 in my account. All right, but those are for like quicker plays too. It would be for like probably like some rehabbing or something like that. Something you about to spend the money, get the money back in your possession to be able to pay it off, type of thing. Or it's some programs out here too. So with BMO Harris, they have a program right now where they help out Black people and Latina people. So if you can find programs like that, they helping lower criteria people where they lower the requirements to like $580 or $600, but they giving up to $50,000. So they'll let you get two products. They'll let you get either a business credit card or a business line of credit, but up to $50,000 is what you'll get. But they lowered the lending criteria, so you don't gotta have a $650. You don't gotta have a $700. Within this program, if you apply within this program, they'll still give you up to $50,000, but even having a low criteria. So you have to start learning. You know, so you got to start learning and get into stuff like this, where we help people in our 5-day challenge to start getting information, because then we can tell you the exact resources about how you can get these places or where to go to get them. You know, and then some cool thing that we're gonna be doing too in our business, because people be asking me about liquidation of the credit cards as well. Yeah. So we've been doing is putting our business right. With ADP, putting our business in payroll, right? So paying our payroll. I got a cool game I just wanted to give them, right? Liquidating our business credit cards to pay ourselves, right? So follow me, right? Basically what we're doing is we're paying ourselves from our business to our personal, but we're using business credit. On business credit, we're gonna make money off liquidating our credit cards, but we also are gonna be paying ourselves. So that's also gonna create paycheck stubs. So now we can use the leverage, the paycheck stubs, to now provide proof of income for things, for funding, or to get property. And then, you know, now you position yourself to do further things like that. So those are the type of things you're going to be doing.
Let's not speak past that, right? So, like, as a former banker, right, I know that there are two ways, right? You have that the way of, getting small business loans, right? But a lot of entrepreneurs may not have, who have business income, a lot of them may not have access to paychecks and pay stubs.
Yes.
And so through your business, you could legitimately pay yourself by liquidating the credit card, going the ADP route, and then through ADP, now you have a paycheck, and now you can also get traditional funding from that as well.
And then I'll give you the last connecting component. I was going to hold it for the class, but I'll give it to him. So the third-party company connection to this is called Plastique. Plastique is having connection with ADP. And Plastique is it's not a liquidation company, but it's a third-party place where you can use your credit card to do wire transfers and transfers from your credit card through that party, which they're going to charge you a little fee. But we got bigger accolades on the back end. So it's a third-party company. They're going to do a connection with ADP, and then that's how we can allow ourselves to use the business credit card to be able to do the liquidation to our personal credit to pay ourselves. So that's the play.
And I love that we came off the gate just kind of giving these different plays on how to start building the generation wealth and building the wealth through not having good credit. But also, can y'all break down to me, because me being in this space for a while, there's a lot of people who don't even understand what bad credit is, right? Like a lot of people may have good credit, but are afraid to, take a step forward to see if they could get approval, whatever the case may be, because they've made an assumption, I don't have a 720, so I got bad credit. Or, I had a negative account 10 years ago, and so I got bad credit. Can y'all explain a little bit how these assumptions that people are making are literally costing them money?
I just want to give a story, but I want Mogul to really break that down. My cousin, funny as crap, she called me. She said, I really want to buy a house, but I'm just in the jam. My credit not good. I'm like, what is it? Send me a login. She had a 693 or something like that. Listen to this. She had a 693, and she said, I thought anything under 700 is bad credit. I'm like, no, you got a good score. Why literally 36 days later, she closed in the house.
Wow.
I said, you good to go now. When it got her, called the bank, got her pre-approved for a mortgage. Yeah. The next day, this was like a Monday night, Tuesday, she got pre-approved for a mortgage. When she went out and looked for a house next day, first she looked at 2 houses. Out of the 2 houses she found, the second one was one that she really put an offering on and she got it. And it takes about 30, 35 to 40 days to close on a property. In her situation, it was literally 32 days she closed the house. So for just having that conversation with someone that actually has the real information, corrected what you thought was wrong, and now you a homeowner.
Right.
Think about how powerful it is just getting in a room with educated individuals that's going to tell you the right information, because a lot of you guys are not closing on your property. A lot of you guys are not starting your business. A lot of you guys are not doing the things that you really want because you man, I don't have a 700, I can't do this. Right. I don't have a 750, I can't do this. Shoot, I don't have a lot of things I can't do that, which a lot of stuff y'all worried about is not even the case.
Yeah, and it's not even about the score. So that's where the education piece comes in, as understanding what makes up your credit profile. Because I have people that come to me, like one of my homies, he's like, yo, bro, I got bad credit. I said, all right. Looked at his credit, he just didn't have anything on his credit. So he didn't have bad credit. You just have no credit.
Right.
So now we got to get you some pledge loans. We got to get you some secured credit cards. We got to be able to go out there and get you to have your rent report on your credit profile. These are the things that we do. So now your credit score jumps up 700, 750, and you can go run these plays. So I would encourage everybody, if you haven't looked at your credit report, you want to go to creditchecktotal.com. It's $1. 7-day trial. Just look at your credit report, right? And that's one piece. And a lot of lenders, they know that most people struggle with credit.
100%.
So it's all about just shooting your shot, right? Like with FHA, you can get approved with FHA as little as 600, 580. The interest rate gonna be a little high, but that doesn't mean you can't get in the door. And then as you build your credit, 2-3 years from now, you can refinance with a better interest rate when your score is up. So it's just about having the information, and I call it, right, we gotta have a financial physical. So like you got a health physical, you go get your checkup, you gotta have a checkup on your finances as well, and you understand how to move on
This
that.
dude is smooth.
I bet 100%. And you know, I think that's why it's important. Like we talk about education, right? And you know, this show is all about educating people, but that education isn't just watching the show, right? That education is getting in the room. That education is, because even some of the plays you just gave, Smitty, like, I was saying to myself, I'm like, oh, okay, like I've never heard of that bank before, right? There's these different banks that pop up all the time who are willing to take certain risks in order to circulate money. Because what people don't realize is that the only way that banks make money is by lending money.
Yes.
Right? And so if a bank has your money and they're not lending money, they're losing. There's no other, it's fees and it's fees and interest rates from lending, right? And so if you got a bank whose business model, period, right, is to lend money to make money, and they are realizing, even from a perspective like you just said, like they know that people struggle with credit, and so a lot of them are going to create alternate ways for them to get people approved so that you could borrow the money. But here's the important thing, and this is I want all my insiders to know, is that it's just not about getting money, right? If you got somebody telling you, yo, go take out debt, I'm gonna teach you how to get money, and here's how you get this money, and that's it, then run from them, right? What the reason why these gentlemen are on my platform is because we don't stop at just getting you like money, because it's debt. You gotta pay it back. But what happens if you take out this debt and now you are in a situation where they're giving you the information to now be able to use that debt to create cash flow? And then once you create cash flow, that cash flow is paying back that debt. You're not stuck with the bag where you're just sitting there saying, "Man, now I got 100,000. I'm gonna go get a lamb chop. I'm gonna go get the new Lambo, and I'm gonna just ball. You know what I'm saying?
I want to add something, right? Because it's so true about what you said, but debt is not a math problem. Like, it makes sense, right? It's a behavior problem because we don't understand financial literacy. We don't understand how money works. We go get $20,000 and then we want to go hit the club, right? But you said the banks, their business model is lending out money. But their money that they lend out is our money. We go to work 40, 50, 60 hours a week to go get our paycheck to put it in the bank, for them to go lend it back to you in the form of a credit card, charge you 20, 30% on your own money that you actually work for, right?
Steal your work and sell it back to you.
That's crazy.
And we've been in that loop.
They've built a billion, $1 trillion industry off of this concept, and we just understand, okay, how can we make this work for us? How can we build money around us? And is another place where I want to, encourage everybody to start looking. It's called CDFIs. So Community Development Financial Institutions, right? So these are smaller institutions, smaller banks where you might go to a Bank of America, they can't approve you, but they may sponsor local initiatives, right? Yeah. So if you are a minority, you're a woman, right? They have different programs for people just like you where you can still go get capital. So ultimately what I'm saying is no excuse. Get the information, get in the room, and then that's when you're going to see everything unfold.
Yeah. I'm going to be honest. There's really no reason you can't do it. I'm prime example of you can make something happen with bad credit. I'm talking about when I first got started, I had horrible credit. 500. That's real bad credit. Like I had 500.
I was in 4.
So, yeah. Oh, I had bad, not bad. Bad. But and I was able to make things happen even with that. One of the things I do want to share with individuals, I started with $300 and ended the year out with over $20,000 in credit, all from a secured card. Yeah. So I went to a credit union, right? The credit union in Philly is called Freedom Credit Union, and I gave them $300. They gave me a secured card back. I literally bought lunch and then paid it off. 2 months later, 60 days later, I asked for a line increase. They went and gave me my $300 back and then bumped me up to $1,000. Remind you, my score didn't change that much. Right. It's just the fact that I like to call it like a backdoor setup. I utilized showing them I'm responsible, and they was like, okay, we'll bump you up to $1,000 and give you your card back. But the thing that happens indirectly is your score goes up now because now you got a $1,000 line on your account. So now I went ahead and started buying gas, little things like that, paid off. Then I asked for a line increase 60 days later again. Then they bumped me up to $5,000. My score did what? It went up again because now I got a bigger line. And I just kept doing it. By the end of the year, I had I can't remember the exact number, $20-something thousand in available credit. And my score went up to 600 from just running that. Literally that same move over and over again. Yeah. But I slid in off a $300 secured. And now that exact card is a $30,000 credit card. But through that 12 months was 20-something thousand, and I'm gonna be 100% honest. The next year is when it went from 21 or 22, and I got the other 8 to make it 30,000. But it all started from a $300 secured card. Yeah. So there's really no reason why you guys can't start. It's just all about being creative, resourceful, and think about like, all right, not taking no for answer. Like, how can I get in? Right. Mr. Banker, how can we make something happen? I understand I can't do nothing today, but how can I make something so my next 60 days is different?
Yeah, and it's also about that consistency in that plan, though, right? So from 500 to now, 500's credit score to over $7 million in real estate assets, right? That doesn't happen if you liquidating assets. If you're, you know what I'm saying? If you're using this just to, build your credit up, get this money, now you ball out. It's about that consistency. Yeah. It's about having a plan. It's about following that plan. It's about getting in the room and also staying in the room, right? Because I think that, what also people don't realize is that, yes, as you're in a room and you're learning from mentors and they're teaching you certain plays, there are things that change all the time. Like I constantly pay for mentorship. Why? Because there are things that are changing all the time that I also need to change with it. Right? Like if I run the same plays that I ran last year, I'm bankrupt. Yeah. Right? There's no way I can sustain 2023 doing 2022 stuff. Right? And so you constantly gotta learn. You constantly gotta be in a room. You constantly gotta be in places where people are thinking ahead. People understand what's happening politically. Right? People understand what's happening in the economy. People understand what's happening because you gotta think about this, right? Next year, right? You already see Biden impeachments. You see Trump trying to, they're trying to lock Trump up and all that stuff. Why? Because there's an election next year. So watch this. When there's an election, you do the research. When there's an election, people start being afraid now, right? And so if you think the economy is retracting right now, wait till 2024. Wait until you got the whole. You have 11 months before you got 11 months in November when we elect a new president in 2024. So everybody's gonna be nervous. Everybody's gonna be retracted. So the economy's actually gonna get worse. But watch this. It's not gonna get worse because people are gonna be afraid. But guess what? The banks still need to lend money. And so if you're not tapping in with people who understand what the banks are doing, right? You're gonna watch the news and you're gonna be afraid and you're gonna think that there's no money to be made when you're gonna realize that property values are gonna continue to go down, but it's an opportunity to build.
Think about that.
Yeah, so based off what he said too, the next step of it would be you got to start building relationships.
Yeah.
So this is a big component when it comes to this banking industry and just getting access to capital and things like that. Building relationships is the biggest component that people are missing. Everyone can do what the masses do is go online, right? Mm-hmm. We go online to apply. We just to go on the website. But the biggest key thing when it comes to getting the best way to do this is go inside to build a relationship with a bank rep or a manager. Now, this relationship changed the game for you. So my last client, we believe when we got a funder on one credit card, got access to $75,000 on one credit card. I believe with the same lender, somebody got access to $100,000 on one credit card. Wow. But it doesn't happen by doing what the masses do. So what we do is we go inside the bank, and I teach my people how to build relationship with bankers so that now our applications or our business line of credits or our business credit cards are getting pushed through the actual banker. You know, so now they can push and they can put, so basically the banker told me they could put in their own special noting based off what they asked us, what we applying for, why are we applying for. So we could say like, we work on this big project, we got businesses, we are business consultant, we helping other businesses, we're doing marketing with our business. So these are smart things we're doing with our business. So this implies your limit to get way different type of approvals than the norm. The norm you might have the same credit score that the norm has, and they get approved for $5,000, $10,000. You coming in on the back and getting approved for $75,000. That relationship 100%. Changes the whole 100%. Entire deal. So now in this time, that's why we teach you how to get $250,000 to $500,000 because now I gotta give y'all my resources too, and then teach you how to become your own, resource creator. So now when you go on your own base and get your own resource, now you got direct contacts.
And it's true though too, because I recently opened up a new business. I won't say the bank because you know what I'm saying, they ain't paying me. But that's why, but like I went to a bank. And I didn't even want a credit card. Like I just needed to open up the account. And so as I was talking to the banker was like, "Yo, you pre-approved for a card." And at first I was like, "I don't want it," but I'm like, I can't listen to y'all and like not take it. You know what I mean? So I said, "All right." So I said, "All right, let's take it." So it's so crazy because as he was asking me questions, he was like almost like alluding to telling me what to say.
Like, hey,
he's like, "Yo, like, how much you gonna bring in this year?" And he's like, well, maybe. And I was like, "Oh yeah," you know
he helping you,
And literally, I got approved for a lot. You know what I'm saying? Like, and it was just straight off of it wasn't something I needed, wasn't something that I was looking for. But now I'm like, oh, I got this credit card. The money's just sitting there. They gave me 0% for 12 months, which is even better because now when I liquidate that card, the bank just gave me, right, but based on my credit, based on my, income and all that, the bank just gave me a 0 interest loan for 12 months that I get to now buy a property, cash flow that property, all the money I make off of that property could pay off that interest, and then now for that 1 year, I'm not paying no interest on it.
Yo, two things I want to really touch on what you said, but back on to like the loan officer you're talking to or the bank teller, they know who's behind the scenes. They know who these underwriters are. I was just telling them earlier how I went to this one bank and they were saying like, hey, look, listen, based on what you're trying to do, based on the relationship we had, and you said something important, ask them about them. I'm gonna let you touch on that. But I was talking with the bank teller so much, we built like a little relationship. He said, look, listen, I'm gonna put your app through, but I recommend we do this tomorrow. I'm like, why? He said, because this certain underwriter is gonna be working tomorrow. The other one is working today, and they on a little roll with denials today. I don't know what's going on, but they on a roll with denials. So I think you should come back tomorrow. I'm gonna listen.
Right.
Come back tomorrow, I got approved. Right. So it's just having that relationship to understand, not even change anything on the app. Like, yo, this person's working the door today. Like, I don't think that's a good idea. But also, what you were saying, how during the challenge, our 5-day challenge, he's gonna be able to give you some context. So think about how much does it cost you not to be a part of this? Well, now if you go ahead and do your own thing, you get $10,000. But now going through him and do the 5-day challenge, you get $75,000. So it's costing you $65,000 not being a part of something. So that's something else to really think about.
Nah, that's some crazy game. And just again, to add to what you said, right? it's so important for you to get in the room because you could try to grab this and run with it, right? But when you go build that relationship, how do you strategically get somebody on your team to work with you and want to actually get you the capital, right? So it's 3 questions that we start with when we go and we meet with a banker, right? You've been in the bank industry, you know how it goes. So when I meet with my banker, the first thing I'm asking, what's your revenue goals? Like, I want to know what you looking to make, right? Right. Second thing I want to ask, what's your KPIs, right? Because I know you have to hit certain amount of thresholds, how many credit cards you get, how many merchant accounts you get them set up for, right? So if I understand your goals, well, now I can help you get there. And then the next thing I want to ask, how do you make money outside of this, right? Like, I have a business consulting company, right? Do you want to do the exact same things? You work for Chase and doing it. I do it on my own, you know, as an independent. So asking the right questions and understanding how to get them to say, I want to be aboard, I want to be on your mission, right? I want to be able to help you reach more people. And that's how we started to do these CDFI loans, because I brought my banker in to help the mentees, and we noticed that so many people was getting approved for 20,000, 30,000, but it was like, damn, how do we get them 200,000, right? How do we get them 300,000? And in order to get to that level, you got to have, tax returns now, bank statements, business plans, a lot more things in place. Okay, well, let's take you to a CDFI. Let's help you get these things in place. Let's help you build your business plan. It may take you 6 to 8 months to actually put it in place, but it's worth it if at the end of the road, you're able to get 100,000, 200,000, and continue to dump into your business to grow. And then the last piece I want to say is like, a lot of people shoot themselves in the foot because they get the first 20, 30,000 and they run off. You forgot about the relationship. Go back, pay it off. All right, let me get 50 now. Let me get 100 now. All right, let me get a merchant account. Let me bring more products to here, because the more products I can do with this bank, the more they want to loan, the more they want to help you, because you're in-house. So it's just a lot that goes into it. And we're going to break that down, during our 5-day conference.
That's the second part of the relationship too. It's not just like an actual personal relationship, but a relationship with the bank, as in like, so what I tell my people to do is go get a personal checkings and savings and a business checkings and savings and like a merchant account. So now I got 5 different products within this bank. Now they're more likely to want to lend with me because they know I'm doing more business with them. Instead of you just getting one account because you're trying to get our credit card or our, a loan with us. You just get one personal checking account, that's it. You look more credible and lendable and friendly to the bank that you're going to do more business with us if you have more products. So the more products you have before you go get the lending is more better criteria you get on the back end.
And it's crazy because I don't think that people understand this too, just from the inside perspective, that the banks have their own score as well. Yes, so like you got your Experian, your Equifax, your TransUnion, but there's a banker score. Right. So I remember and which is how I got the pre-approval, right? I go into the bank, I got tons of, you know what I'm saying? Like, I got a lot of money there. You know what I'm saying? So they already know I got bread there. So now, based on that, they give me a score. They give me like a bank score. So before, they didn't run my credit. They didn't do nothing. They just said, based on my profile, you've been pre-approved for a credit card. And then all I had to do was say, all right, bet, go ahead, run it. Now they run my credit. Now they're able to tell me how much. They wasn't able to tell me how much prior to, but they know that based on my relationship, hey, you got a certain amount, right? And so building that relationship is really important, because even, and that's the other thing though too, is that, and I'm harping on bad economic times for a reason, right? Because what happens is when a bank knows that we're in these times, these bad economic times, it actually becomes easier to get money. Why? Because they know that people are afraid, people are not lending. So if they find somebody who's willing to borrow, right, who's willing to take that risk during that time, they want to hold on to that person as much as possible, especially if they see that person has a relationship. Because if that person who has a relationship, they cannot afford. Think about this. You have a relationship with the bank, like you said, you open more than a credit card, you got an account, you got a merchant service, right? You're worth a lot of money to that bank.
Hell yeah.
You go apply for something and they deny you, and you say, because you denied me, I'm taking all of my stuff with me. They know that's not gonna happen. So they even have people on their retention teams, right? So when your application go up, they're like, all right, let me make sure that let me make sure I approve this person. Or let me double check. This underwriter gonna double check this application, because they don't want to piss you off and you take your money out, right? But also when you think about y'all having those relationships, and then now y'all recommending people, and then now you're almost passing on your clout your energy to your mentees. Because if they know I got a certain amount of money with the bank, and then now I'm introducing them to so many different people, and I'm bringing people in, they like, oh no, this client came from Ash. Make sure y'all take care of this person. You know what I'm saying? So that's another reason why relationships are really important, and you want to cultivate those, especially with the bank.
That's why how many mentees I got approved just off of me calling the lender. Yo, they from me. Like, go ahead. Okay, we'll.
Y'all need that Amex connect too, B.
Yeah.
That's why Navy Federal. Everybody in the world loves Navy Federal.
Yeah.
And the reason why is because their internal banking score allows people to get approved for higher limits with lower criteria.
Yeah.
They don't care so much about the credit score. That's why everybody loves this bank.
Yeah.
I seen somebody with a 550 get approved for $25,000, which is rare and barely probably ever going to happen. But based off the banking internal score within Navy Federal, they allowed them to get approved for such a high limit, but that's where the relationship is important at. You know what I mean? Yeah. You would never get that nowhere else. But
you proved something that I said earlier, how the banking score, how they pre-approved you off of just what the numbers look like in the account.
What was that?
What did I say earlier? We utilizing hard money lenders. They sending money to your account and draw.
Right.
They're looking at the account. One of the reasons why we go ahead in every property, we might open up different LLCs and different bank accounts because we'll have different amounts of money coming to each account. And they calling me, yo, do you need a line of credit? Do you need a credit card? Do you need something? Because you just got $100,000 sitting there. You got $200,000 sitting. You got a couple $100,000 sitting. You might even got $60,000, $70,000 sitting there. You're a banker. Like, how many people really had that much money just sitting?
Facts.
There's more people that's overdrafting than are people with $60,000, $70,000
and
sitting.
Honestly, though, the mindset of a bank says that if you got $60,000, $70,000 sitting in one bank, that you actually got more money other places. So I was a private banker for about 2 years, and so I managed money for people who had $2 million or more, and we knew that if somebody could hold like 70,000, 80,000, whatever, even if we was right or wrong, we treated that person like they had millions. Why? Because the data just showed it that that the average person who has a $70,000 sitting in a checking account, it probably has assets other places. And my job was to be able to cultivate that relationship to be able to get all of those assets everywhere else. So as a private banker, I treated them with the white gloves, you know what I mean? Like I gave them the white glove so that way that, they could know, like, and trust me, and then now start bringing me some of that asset that they have other places. Sometimes that's all they had, but most times they had assets other places. So that goes back to what you were saying, is that they're making, like, the bank's algorithm is making this assumption, like, oh, he got bread somewhere else.
Exactly.
And then now
we just gonna clear you off of that.
Yeah.
And they about right. That's about right. That's accurate.
That's accurate. That's
smart.
Yeah.
And so 5-day challenge, man. Like again, if y'all missed the last episode where we talked about business loans or business lines of credits, make sure y'all check that out. But we definitely want them to tap back in to the 5-day challenge. If you didn't, right? Because again, the reason why we're doing this again, because people realize that, we were getting a lot of messages, right, of people who got some fundings. People got, and here's the thing that I appreciate too, and that's why I want you to watch the other episode as well. There were people hitting me up, before they even joined your challenge. They actually said they joined your challenge with money they made off of watching the free episode. Right? They watched the episode, they ran the play, and they was like, yo, if I'm able to make money off of this free stuff, I wonder.
It's a no-brainer.
It's a no-brainer.
Oh no, I got a cool story of somebody from your channel too. Yeah. They made money off, so we basically let them get a referral link, right? When they join our challenge, we let them get a referral link for them to make money before they even got in the challenge, and somebody made money off that way too.
Wow.
So they some of them got approved off what I was saying for the money that way, but they also was making like actual money off us being able to give them advantages to make money within our system when they got in, to get an affiliate link, to get other people in, and they made, like, somebody made how much? I don't know, over $1,000, over $2,000.
Yeah, they made it back. Wow. Edge, I'm gonna be honest with you.
Yeah.
All we do is sit up all night till 2, 3 in the morning trying to figure out how can we make this better.
Yeah.
How can we get people money faster? How can we get people more results faster? How can we get people properties faster? How can we get people results fast? That's all we think about all night long. So when you tapping into the challenge, it's not something we threw together. It's something we actually brainstorm. Like we literally, I'm going back and forth with them by adding something else in, but they don't want to do it. Like, how can we fix individuals' problems the best of our ability, because at the end of the day, you still got to execute.
Right.
Yeah. But how can we go from B to Z for you? You got to do A. You got to come out off the porch. But how can we do B to Z for you and really put this together? That's all we think about. So we want you guys to understand, when you tapping into us and our 5-day challenge, it's not just, we just getting on the Zoom teaching. Like, no, we're really brainstorming non-stop. How can we make sure you are successful from our heart? So,
and I want to make this clear too, right? I know we're talking a lot about getting funded, but it's bigger than just getting funded. We actually show you what to do with the funding and how to actually buy assets. So that week during the 5-day challenge, somebody already got some properties under contract.
Yeah.
Because Boom showed them how to make offers on day 2. By day 3, they was getting things under contract.
Wow.
By day 4, they came up. One person was like, yo, I found a storage facility. I don't have the money for it right now. Who else could come in and partner with me?
Everybody
now they doing
like,
private Zoom. This is just the 5 days. They built their own private Zoom, and they collectively going to buy the storage facility in 5 days. So again, I just want to make sure everybody understand, not only are we showing you how to get the capital, we're showing you how to collectively go out there and buy these assets, because that's truly what's important for you to build financial freedom.
Yo, if it's cool for you, can we all just say like one thing from the challenge, like just one thing that happened? Because I want people to really understand. So one thing we did on our challenge, on my day, I gave them an actual proof of funds letter. Like, I screenshotted the bank account and gave it to them. Was like, yo, this is what you can use to send out the client. I erase my name, and there you can go and use this to put offers in. And I gave them the actual script to copy and paste and text that to the homeowner. That's how people was like, yo, I got a property under contract. I got an appointment. I can go walk through this property. Just send them the proof of funds letter and copy and paste a text message. People was getting that. Like, this stuff was crazy.
They take the proof of funds, and I give them an actual pitch deck that you fill it out. I just give them a template. This pitch deck shows you as a professional and your criteria and what type of properties you're looking for. Show them how to go find brokers on different websites. They take that, ship it off to the broker. Then the broker see they got a proof of funds and they got a pitch deck sending them storage facilities that they got off the market to different people, right? And this is what they was doing during the 5 days, which is crazy.
Smitty got people $1 million.
Yeah, so you know what I'm here for. You know what I'm here for. I'm here to get you the money, right? So someone got over like 200,000, I believe. But then he got so familiar with what I taught him, he started putting somebody else in position. So he said he had one got his family member over 6 figures in funding as well off what I taught him. So it's first himself, but then there was a domino effect to be able to get somebody else's some money too. So that was like, I'm like, that's what this stuff is about, bro. That's how this could be helpful to multiple people, more just than me or you. It could go further down the line.
The one dude did fund it for someone else in a group. You saw that? He got to do $20,000 in the group, and he charged them a fee. So say, for example, you join a program, but you like, look, listen, Smitty give us a whole bunch of plays, but I don't really got time. I'm moving around to stay up late and do the whole credit card application. Somebody did it for him, and then he made $2,000 or whatever, charging him to do it. So people in the group funding each other and making money within, like, it's nonstop. It's nonstop.
Yeah. Yo, and again, like, I really want to, like, employ everybody in here, man. This information, and that's the thing that I enjoy, is the information is not just information. Yeah. Right? These are it's tangible plays. These are actual things that you could do. You could run the plays. You could, and that's the thing though too, right? You have to understand. You got to understand the relationship with the banks. You got to understand what? You got to understand what credit bureaus people are pulling from. And so that's why y'all research is really important, because if you don't know that Chase and Amex are pulling from the same credit bureau, then you might think that, all right, you know what, I'm gonna run this play and I'm gonna get a Chase card and an Amex card, and then one of them gonna deny you because they're gonna see that you know what I'm saying, that they got pulled from the same credit bureau. So you gotta understand, like, who's pulling from what, who's giving what are the different types of banks? Is it a traditional bank? Is it a regional bank? Is it a CDFI? Right? In my estimation, the CDFI is like a best kept secret. Like, people don't know about those, right? Because one thing, I mean, you alluded to it, but I can just talk to it from a banker's perspective, is that every major bank has what's called CRA credits, right? So Credit Reinvestment Act, and this is a law, right? That the government says if you are a major bank, you have to reinvest back into your local community. Right? And so if you're a Chase, a Citibank, a Bank of America, Wells Fargo, they say, look, I need you to reinvest back into your community, and each year I need you to report how much money in loans did you lend to my community, right? But a bank like Chase is like, yo, I don't got time to do the CRA stuff. Wells Fargo, they like, listen, we after the big institutional money, so we don't have the time. So you know what we're gonna do? We're gonna grab a CDFI. We're gonna grab a community development financial institution, and we're gonna give them the money. They're the ones who do the due diligence. They're the ones that gonna get us the quality loans, and we're gonna give the money to them. They're gonna lend to the community in return, because we lend to them and they lend to the community. Now we get our CRA credit. Now we because we're federally chartered. Now we get to stay in business.
It's a website to check that.
I didn't know that.
It's a website to check that. It's a website. It's called ibank.net.
Yep.
We can see that. We can see that on that website.
Yep.
That's crazy that you just said that. We can see that. And then those are the banks. Those are the banks you get lending from. You can get lending from those banks that's lending out a lot of money.
100%.
Oh my God.
And that's what I'm trying to say. Like, they have to though, right? They have to, because in order for them to continue to operate, right? So you think about, you go anywhere in Philadelphia right now, right? There's, even in the poorest neighborhoods, there's major banks everywhere.
Yeah. Citizens.
Right? And guess what though? Because they are a federally chartered bank, this Community Reinvestment Act is a law. It's a mandatory. They have to lend in those neighborhoods. And that's why but again, because they don't have the time to do it, they get the CDFIs, they get the nonprofit organizations, like that. That's how they fund that money in order to get those CRA credits. And if they don't get those CRA credits, they can't even operate in those neighborhoods.
I did not know that.
501c3 and non-for-profit stuff like that. Learn about grants and learn about stuff like that. That's when that's come in at too. Yeah. And
so. You know, again, learn the tricks, learn the rules, learn how to do those things, man. Yo, if they want to join y'all challenge, man, 5-day challenge, where they going?
All they got to go to is fundingthevault.com. We set it up for you, make sure it's all everything branded. But all they got to do is go to fundingthevault.com and they're going to get access. But look, you want to make sure they go platinum with it. They got to go premium so they can get extra time, extra bonuses, extra days, extra.
And talk about that a little bit, right? Like what are the different tiers that they get into the challenge with?
So you can do you got general mission, you got VIP and platinum, but the real specifics is it's a 5-day challenge. Yeah. But when you go platinum, you get a whole extra day. So now instead of 5 days, you get 6 days. And with general mission, you're able to watch and just view the whole challenge. But when you actually go platinum, you're able to get the extra day. You're able to ask questions. You're able to get access to our Telegram group where we're going to be inside communicating with you. It's just so much stuff. Like, we'll be on here for another 30 minutes just listing all the things that you get. But it's just, like I said, the main thing is I want people to understand. Like, when you say you ever buy something from small businesses, like, yo, you're not just helping this, you're helping this. Like, we're really is all loving this. Like, what we're doing is real love. Like, I wish y'all we should just record us one night. Like, we really, no, not even trying to sell now. We really up to 2 o'clock in the morning. How can we make this better? Like 100% better. What can we add? Can we do this? Can we do this? This is some of the reviews we had. This is some of the stuff that people had. Somebody said they got 50. How can we get them 100? Some people got 1 property. How can we get them 2 properties? Somebody said their credit score went from 600 to 650. How can we get it to a 700? Like, what can we do to make this stuff way better?
One thing I would suggest though too is, I know y'all track the amount of money that y'all get from a funding perspective, but as they're buying properties, I would also track the amount of net worth that you've added to the community. You know what I'm saying?
No, we didn't do that.
Because you got to think about it. If y'all funded $2 million, what do they? Because y'all not just teaching them to get money. No. Now they got $2 million, and then now they bought a property. Like, I know that y'all teaching them, right? Like, to be able to use that property to get this, to get real estate, to get storage, to get these properties that now are going to increase in value. And so, what is that value, right? So now, if y'all got $2 million, and based on that $2 million, people were able to buy $20 million worth of real estate property. Now that's $20 million that you just circulated back into the community. You know what I'm saying? I think that's important, because you know people, like I don't know if we said it on the show, if we said it behind the scenes, but unfortunately, we are okay. So as Black and brown people, we are so behind financially by design, though, right? So like I talked to y'all just now about CRA credits, right? Why does that even matter? Because of redlining, right? Because there was a concerted effort. So there's a good book called The Color of Law. If y'all want to learn about the legal things that the government did to hold black and brown people behind, it's called The Color of Law. And redlining was literally where banks had a map and they would draw red lines through the hood, right? And they would say legally though, they would legally say, where do you want to buy a house? If it's in this red line, you can't buy here. Which is how a lot of the other ethnicity, mainly white people in America, were able to gain wealth through real estate, right? Because of redlining. So once the government got caught and people made noise around it, they created things like the Community Reinvestment Act to come back to try to fix, right? To try to fix what the government did with the wealth gap, right? And so I don't know if y'all know this, but what y'all are doing is correcting what happened in the past, which is why I get upset, which is why I use my platform to amplify your voice, because the people who are detractors, the people who are trying to always find reasons why, saying that there are people not doing the right things, they're detractors. They don't understand how far behind we are, and they don't understand how much this information is vital, right? This information is saving our community. Mm-hmm. This information is helping our community get to that next level and build generational wealth. And we built this country. Right. My fault, I'm on a high horse. I say that.
Yeah, you talking facts.
Yeah, you know what I'm saying? And so, look, I say all that to say, listen, these guys are vetted. They are really helping people get funding. They are really giving you plays on how you could get into real estate, how you could build generational wealth. You could use other people's money. If you have bad credit, if you have no credit, please rewind this. Bad boys behind this, right? Rewind this. Listen, there are plays, there are things that you can do that even if you have bad credit to still build generational wealth. It is no excuse. You could choose willful blindness, but understand it is a choice. You now are in the best position that you've ever been in your life to really build generational wealth for you and your family. Go to fundingthevault.com, tap in with my guys. Yo, last gems, last words for the people.
I think we gave it everything they got.
Yeah. Yo, man, I felt like we left it all on the line. You know what I'm
Yeah.
saying? That's what we do. Like each and every time we do it, we make sure we give you everything we got. So go to fundingthevote.com. Make sure you lock in your spot. I encourage you to go platinum. You want to be the best of the best. Whenever you're gonna get in the room, just be the best, and we're gonna make sure we give you our best. And that's what we got.
All right, y'all. Look, we are closing out the vault. Another awesome episode of Inside the Vault with Ash Cash, the greatest money mindset show on the planet. Yo, make sure y'all tap into the 5-day challenge. I'm going to see y'all there, fundingthevault.com. Make sure you follow us on all social media platforms at Inside the Vault. Our website is InsideTheVaultShow.com. Me, I am Ash Cash. Make sure you visit me, IamAshCash.com. Follow me on all social media platforms at I am Ash Cash. I'll see you next time, same place, in God's will.
You coming on as a guest?
Peace. Yo, y'all never invite me.
I'm saying I want to get it on camera.
Yo, we on camera.
So come on as a guest.
Yo, catch me fun in the vault. You dropping some game, y'all.
Let's go.
Diaries of a retired beggar, y'all. We'll see you next time. Peace.